I'm Nicholas Penrake, and you're listening to A Trader's Life, the podcast where I get to talk to successful traders about their approach to trading, how they started out and went from broke or breaking even to pulling in thousands of dollars a week. Trading is a tough game. They say only around 5% of those who try actually make a profit. Join me for A Trader's Life to glean some valuable insights from the market wizards I get to talk to. A few days before Thanksgiving, I got together with Barry Burns, a trader based in LA. Barry started trading as a kid, and for over 25 years, he's been teaching ordinary people how to trade in a wide variety of markets. He's the first pro trader I've come across who prefers to trade really low timeframe charts, even ticker charts. So let's get started. Hey Barry, how's it going?
Hi, Nick. I'm doing very well. How about yourself today?
Yeah, all good, thank you. So tell me, you got into trading, I seem to remember from one of your videos, quite young. Your dad was a stock trader and you got in. Did you go to work for him, or was it just his job and profession got you into trading as well?
Well, actually, my dad was a stock trader, and his real career, when I say real career, the one that he did full time, was he was an internal auditor. So he was in finance, but basically a finance or like forensic finance. So he would go around for that time. It's called Michigan Bell Telephone, eventually absorbed into AT&T, and he'd go around to different branches, and he would surprise them, just show up and say, "Hey, show me your books." And so
Okay, yeah.
it yeah, he was kind
Text
of
now. Yeah.
yeah, financial 007,
Yeah.
secret agent kind of guy. It's kind of funny. But anyway, so yeah, he was always in finance. Now, his trading, he did on the side, although he made more money trading than he did from his regular job.
Okay. Yeah.
But you got to remember, back in those days, well, I
Oh, very
didn't really
different.
say,
Yeah, very
yeah,
different. Yeah.
very, very different.
No internet.
Exactly. Yeah. So I was born in 1959, and he'd been trading, since he was 18.
Oh, wow.
So, yeah, back in those days, in fact, I remember him telling me the stories of how on lunch break for the telephone company, he would go down to the local brokerage firm, and no computers, obviously, back in the days of yore. So I don't even know if he had a TV back then, but basically, what he would do is go down to the brokerage firm and eat lunch there. He'd take his little sack lunch, a little bag, and then he would sit there. And there was a guy who had all these chalkboards set up. And so they'd have the major stocks up there, and the gentleman would start on the left, and he had major stock symbols up there, and he'd write the price. And then you go to the next board, rate the price of the next one, next one, next one, next one, all the way down to the right. And then he'd start over on the left again, take his eraser and erase the last price, and then draw the new price with chalk on the blackboard. And he'd just keep doing that all day. And that was so-called the ticker that they had
Oh, wow.
available.
Yeah. Yeah. Yeah, yeah. Gosh.
And he met a gentleman there who also was a trader, and that gentleman taught my dad. And so, yeah, we're going back to the old days. And then my dad started to teach me when I was 8 years old. And again, even
8.
then, we just had,
Wow.
yeah, 8. And what he would do is, again, no computers or anything like that. So the price, that you would know would be yesterday's newspaper's price. And but he would sit me down with portfolios. He'd bring out portfolios of 5 stocks, and he'd say, "Bear," he called me Bear. Which one do you want to buy? Well, at that point, I wasn't even quite clear on what a stock actually was. So,
Not surprisingly, somehow. At 80
yeah,
years old. Yeah.
exactly. So he didn't really teach me as such, but what he did was just throw me into the water, and I'd ask questions, and he'd answer whatever questions that I had, but he never formally educated me and taught me anything. It was just by example. So whatever one I chose, after asking a few questions that I didn't even know what I was asking, he would buy one, and he'd buy it
Yeah.
with his own money, and then we'd watch it. And then we'd watch the other 4 stocks as well and compare. And then the next week we get together and do the same thing. And just did that week after week for a couple of years, and you finally start to kind of get a feel for it.
Yeah.
You see how the one you chose worked, and then how other ones worked compared to it. And since there was real money on the line, it was, even though it was his money, it was a little more interesting than just theory, because it's like, gosh, my dad's investing real money in this. It's my college education.
Yeah.
But I don't think my dad never told me this, but I got a feeling that he vetted all five and was willing to put, some money on any one of them, no matter
Yeah.
which one I chose. So, yeah, just do or die, basically. And I remember we would call the broker on our old rotary telephone, and then you want to get the latest price on something. That's what you had to do. And of course, you never reached the broker. You always reached his secretary or his assistant, and then they'd have to call you back. And a very slow process. And
Yeah.
then it was
Yeah.
like $50 commission to get in, 50 to get out. So day trading was just non-existent.
Yeah.
And so trading, it's just it was slower back then. And it's hard to even call it trading, but we weren't investing for the long time. So we'd stay into something for a few months or whatever.
Yeah.
And anyway, that's how I learned. And then, later on, decades later, I actually ended up teaching my dad some things, because he was never very adept with computers or online trading. In fact, he really didn't like day trading when that came around. He was opposed to it. He did not like it. And he would never short stock either, because in his opinion, shorting stock was betting against the economy, betting against
Yeah.
the
Yeah,
the world.
that definitely dates your dad, doesn't it? Because that was the thing, wasn't it, for a long time that I mean, in fact, a lot of brokers didn't even allow it, did they? Yeah,
Right,
yeah,
right.
yeah, yeah, yeah. So you started trading, obviously with your dad to a degree, but then you branched out on your own. Did you go to work for a firm, or did you just have that as a thing on the side until you finally developed your own trading skills enough that you didn't need a day job, if you like?
Yeah, it was first on the side, and I think that's how most people start.
Yeah, yeah,
You can start with a firm, obviously, and that's not a bad idea. But for me, yeah, I remember, and then, gosh, I'm feeling old today, but talk about old school. So the first formal education I had in trading, computers had just kind of, I don't know if we didn't even use computers back then. I guess. Well, I had Metastock. I remember that was the first trading software that I had. Still use it to this day, by the way.
okay,
And but we didn't have broadband access and all that kind of stuff. So the first way that I learned, actually, now I remember, before I had Metastock, the very, very, very first formal education that I had, the instructor would use these. Or those old projectors where you'd have the what was it, transparency, and then it would show the pictures up on a screen. And so old I can't even remember what they're called, but the instructor would show a chart up there, and then we had graph paper, and we would then basically just hand write the chart bars
ah,
on
okay,
graph paper.
yeah, yeah.
hmm And it's interesting though that really, I think something about that stuck with me, to have to actually physically draw the bars. Again, a very tedious and slow process, obviously. But there was something about that that gave you a feel for the market. And I'm not even quite sure how to explain that. But yeah, and all of us, I remember in the class, and there was quite a few people in that class, and I ended up studying with this gentleman for years, but he he insisted that that was the best way to learn, and all of us are like, "Oh my gosh, this is so slow and tedious and
Yeah.
annoying."
Yeah,
But
yeah, it would
God,
kill people these days, wouldn't it? I mean, with the internet.
yeah,
Just
exactly.
die of boredom,
Yeah,
yeah.
yeah.
Yeah. So you started, trading on the side. What were you trading? Was it stocks, like your dad?
Stocks.
Yeah,
Yeah, purely stocks at that time.
yeah,
Mhm.
yeah. And were you doing any simulated trade? I suppose it wasn't simulated trading, really. It's a very modern thing with computers, isn't it?
Yeah, I don't recall doing any
No,
simulation trading back then.
straight
Mm-mm.
in live, yeah.
Yeah.
And so once, if we're coming a little bit more further down the road, if you like, with computers and indicators and all this sort of thing. Uh, were you exclusively stocks for many years, or did you start to branch out and do other disciplines?
Yeah, purely stocks for a long, 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 long time, many, many, many years. And let's see, then I down in Orange County, California. I live in Los Angeles, California, but at that time I lived in Laguna Beach, and there was a yeah, actually, it was a day trading club, and it was called Day Traders USA, as I recall. They've changed their name now to Worldwide Traders.
Okay.
But yeah, that was exclusively for day trading, and um, you know, so much decades had gone by that time, and so I'd been exposed to day trading, and I was very, very interested in it, and I'd read books and so forth, and I thought, wow, to come together with other people would be amazing, and they'd have a different speaker every other Saturday, and nice community of people because trading can get kind of lonely and isolating.
Yeah.
So yeah, so it was great actually, and then I hired a mentor from that club, and he turned out to be a really good friend. But he introduced me to the futures markets,
Okay.
and so he day traded futures instead of stocks, and so then I moved over to futures, still traded stocks, but I just did both.
Yeah. And did you also do forex and options and so on a bit later?
Yeah,
Yeah.
yeah. Ironically, my e-mini teacher introduced me to forex, and that was before forex was super popular like it is now. And but yeah, I remember at that time. Don't remember the year, but the S&P was kind of range bound at that time, and my instructor came across forex, started trading it, and then we became friends, and so he stopped charging me, and I'd go over to his house and his really it was a girlfriend's house, and the three of us would trade there together, and we were trading mostly the euro then at that point.
Yeah. Yeah. And how did you find the transition from stocks to forex? Did you find the things you learned with stocks could be applied pretty much for forex?
Pretty much, yeah. I mean, there's some differences, obviously,
Yeah.
but yeah, the basic. I mean, I definitely could take what I learned about trading stocks with regard to technical analysis over to forex, and because we were trading the futures instead of the spot forex, it was a pretty smooth transition. It really now. The spot forex, that's a little different because volume is measured differently. There's no central exchange, things like that. But trading the futures foreign exchange was yeah very similar. And at that time, the euro I remember was in a raging bull market, so it was almost like trading during the tech boom, trading stocks during the tech boom. That was just easy, and everybody thought they were a genius. All you had to do was close your eye and hit the buy button, right?
Yeah, yeah, yeah,
And
until it burst, the bubble.
exactly.
Yeah,
And that's how the euro was when I started trading the euro. So
yeah,
it was deceptively easy until it wasn't.
yeah, yeah, exactly, yeah, yeah. And how have you found the past 8 months? Obviously, we had the pandemic and we had the huge dip in March. Have you managed all that? It's difficult to navigate?
Actually, we've done great. The setups based on the way that I now have established my own methodology through all these years. I put together a little from this person, a little from that person, all the things that I learned, and found what resonates with my brain cells. And so, yeah, we've done very well with my methodology. When I say we, me and my students,
Yeah,
and there's just been some fantastic trades. So this year we've had looking at swing trading, so just looking at a daily chart of say just the S&P, keep it real simple. We've had just amazing, amazing, great trades. So we haven't found it difficult.
talk to me a little bit about how you trade the S&P in terms of, say, perhaps timeframes, indicators, what you look for.
Sure. So I now these days I still day trade most days, and I swing trade. And so I day trade futures and I swing trade options.
Yeah,
So I've really settled into those two. The futures that I'll day trade are and I'll still trade the euro, the yen, gold, crude, Sometimes I'll trade the 10-year note and definitely the E-minis. So I'm looking at those 6 markets, and those are all that I day trade. And I can just have them all up. I've got 4 monitors, and I just keep them up and look at them. For swing trading, I trade daily charts in 3-day charts, actually, instead of weekly. And there, the whole stock market is open to me, including ETFs and ETNs and things like that. And I'm
Yeah.
using, like I say, the swing trading. So when I'm doing my option trading, um, it's simple. I don't do any complex option strategies. I mostly just buy calls and puts. Sometimes I'll do debit spreads. Sometimes I'll do credit spreads. I got 3 credit spreads on right now. And there we're looking for stocks that have gone into the 2 or 3 sigmas, 2 or 3 standard deviations away from the mean, and just waiting for those to revert to the mean. So I'm selling vertical spreads, and those just are great income strategies to use. Not big winners, but the win loss ratio is just tremendous. But I'm a really good directional trader, so really great at that. Frankly,
Yeah.
sounds like
Yeah.
I'm bragging, so I don't think I should say that. But anyway, I've gotten really good at that over the years. And so for me, my big trades, my home run trades, and what I trade most of the time with options are just purely buying calls and puts. My risk is limited to the cost of the option, the contract. And I'm pretty fast with it, though. I don't hold it. I don't hold options for weeks and weeks and weeks. Most I'll hold in options maybe 2 weeks,
Yeah.
and sometimes it's 2 days.
Yeah.
So the theta decay doesn't really hurt me, and I love that. And that's a nice lifestyle because I do scanning. So I've created my own scans for the statistical probabilities that I'm looking for. And when I see those scans come up, then, in fact, literally, what I'll do is just at the end of the day, I'll day trade until about an hour before the close. Then I stop day trading. I keep them totally separate. I'll run my scans for my swing trades, and my candidates come up. Then I'll eyeball them, look at those charts, and then the ones I like, I'll go and then look at the option chains, make sure that there's enough liquidity, open interest, volume that day. Look for open interest clusters, and then make sure the bid-ask spread isn't too bad. I like to make sure there's the ask is no more than 10% of the bid is my rule of thumb. And so, because you want to be able to, get in and out at a decent price. And so I've got those option parameters in place as well.
I saw your video on the stochastic. Well, it wasn't just on the stochastic. It's just sort of like an intro video to some of your courses. And one of the things you discuss is the settings of the stochastic and how to read it, and how when you started out, you were given bad advice about how to read it in terms of momentum, when to get in, when to get out, what was oversold, what was overbought. And that was one interesting video I saw that it was really well explained, I thought, in terms of understanding momentum and reading it, and also with respect to trend. What other indicators do you use besides stochastic?
So I used just common indicators that are on every trading platform out there. I don't use any proprietary indicators, but what I do is, as you saw with that stochastic video, is I do modify the inputs or the parameters.
Okay.
I never use the standard
Yeah.
settings.
Yeah.
So I do reserve the details of everything that I use and all the parameters and so forth for my paid students.
Sure.
But just to give you a general idea, so I use 5 what I call uncorrelated energies. And when I say energies, I'm talking about the energy of money or money flow. So my belief is that markets are all auction places, and people bid, people ask, people buy, people sell. There's supply, there's demand. So the only thing that really makes markets go up is when there's more demand than supply, just like in the economy.
Yeah.
And the only thing that makes prices go down is more supply than demand. And it has to continue to, the price moves based on where you can match buyers and sellers. And that's it. Now, there's usually some sort of catalyst behind that, but that catalyst doesn't have to really be logical because people are emotional beings. So again, back to the tech bubble that we all know about, or way back in the days of yore, the tulip bubble. Was the fair value of tulips,
Yeah.
what they were selling for? No, irrational exuberance, as our friend Alan Greenspan said. And so these things can get very out of whack, and they can get emotionally away from their fair value, far away from their, what fundamental analysis would indicate, and get very illogical. But people get excited about something, and if they're excited, they're going to buy. And when they buy, it goes up and up and up and up. And like you say, eventually it all comes crashing down. But there can be, they say the market can remain irrational longer than you can remain solvent.
Yeah, I've heard that one.
And that's very true. These bubbles lasted for a while. This stuff would go on for years and not just for days. So this is why some of my students get a lot off track. I'll get back to more specifically to your question, but this is why I only watch supply demand. I'm not really interested in, what the news is, because I've seen people, maybe good news comes out, good earnings on a company, and the stock goes down.
Yeah, in fact, that's quite common, isn't it? Yeah,
Yeah,
yeah. In fact,
and you
some
think
people even trade off it.
they do,
Yeah,
and I do. In fact, I use a technique around that. So I just stick to, when I say the five energies of the market, I'm just looking at, okay, what are people actually doing? Actions speak louder than words. Are they buying for whatever reason? Are they selling for whatever reason? And I'm just going to follow the money, honey. So I use five tools, that objective tools that measure that imbalance of supply demand. So those five energies are: number one, trend. So I use a trend indicator, and I will only get early into a new trend. So that's number one. Number two is momentum. What is the strength of that trend? Because trend is just direction. And market can move up on weakness, which is usually done by retail traders. And retail traders are not the quote unquote smart money.
yeah,
So I'd rather trade with the smart money, the big institutions, when they come in and they accumulate over time with huge amounts of cash. Well, that's what I'm going to follow. And trend trading was originally called trend following for that reason. So early in a new trend, because the trend is your friend until the end. And the real meaning behind that slogan is, don't get in late in a trend, probabilities diminish, get in early in a new trend. Number two, make sure it's strong, indicated by big professional money coming in to push that up. And remember, professionals have, well, big like hedge funds, and there's so many exceptions to the rule I'm thinking of. But basically, when big institutions bring in big money from themselves and their clients, that takes a little time. They can't bring it in all at once, or it shoots the price up because the demand is so high, and then they get filled at worse and worse prices. So they're basically trying to average out around the VWAP for their clients. And so anyway, I'm looking for that, and it's like they're like freighters turning around in the ocean, and I'm like the little speedboat zipping around them.
yeah. How do you tell the difference between institutional money and retail traders?
So that's a good question. Let me come back to that. Can we
Okay, yeah,
put a pin in that, and I'll come
yep,
back to that,
sure.
just so I can keep the context for our listeners here. So early in a new trend. Number two is momentum, which we'll get back to. Number three, at the right time. So that's where that modified stochastic comes in. I reduce K down to 5, a length of 5, because I really just look at that for little momentum shifts within 5 bars, literally 5 bars, to nail swing highs, nail swing lows. Energy number 4 is support resistance. I consider that a blockage of the energy of money flow, potential blockage.
Yep.
And then number 5, I look at a longer time frame, so that again I could see, all right, people trading, a shorter time frame. This is where that energy of money is. And then, oh, here's another group of traders trading longer time frames. Where are they at? I want those both to be in the same direction with regard to momentum. Don't care about trend on the longer time frame. I only care about momentum, because that's the strength of the money flow, and trend is always lagging. So that's the fifth energy. I call that the fractal energy. So we got bullish momentum on two different time frames. That gives me, better odds of more people more money coming in. Now, to get back to your previous question, it's these days it's very, very hard to track the big money. And that's very intentional because, well, now we have dark pools. And so they trade off exchange. And they don't even know who they're trading with, right? Who's on
Okay.
the other
Yeah.
side of their trade.
Yeah.
So it's yeah, dark pools were intentionally created so that we can't see what the institutions are doing. Um, and so it makes it trickier. So that's why I have 5 different energies that I monitor because no one of them is reliable.
Yeah.
And one of them gives us a probability scenario. So there's no one way to do that. So that's why I use 5. So I wait for these 5 uncorrelated energies of money flow to align, all being bullish, all being bearish. And that's when I take a trade. That's when I think, okay, no one of these is going to make me money, but since these are uncorrelated, if all 5 of them are bullish or all 5 of them are bearish, now the probability is that's where the market's going to go for the next, whatever period of time. And I just stay in until one of those energies starts to disconnect from the other 4. And that's when I get out. So I trade bar by bar, just watching what's happening, what's really occurring. And as long as that maintains, I stay in. Once I see one of those energies contradict the others, then and sometimes I'll wait for 2, just depends, a lot of details in there that I look at. But then I get out. So that's really the answer to your question is when all 5 of those disparate energies align, that's when I say, okay, we've got a high probability that, now
Yeah.
we've got an alignment of, well, the demand is overwhelming the supply. And yep, that's pretty much it.
What sorts of stocks do you go for? Are you going for quite a range from anything from the penny stocks to mid range, and then the Apples and Microsofts, or do you have maybe even a sector like tech, or is it your scanner that is doing pretty much the job to focus your mind on various options for that day or for that week?
Yeah, it is the scanner. I don't really, I don't, when it comes to trading, I don't really favor any particular sector or industry. I do stay away from penny stocks. So in my scanner, for example, I have a filter in there. It's just not going to show me anything that is a stock under $5.
Yeah,
And then volume, I want to make sure it's got at least about $500,000 of average daily volume.
yeah,
So and that's the lowest that I'll go uh, because I want to avoid the pump and dump type of stocks.
sure, yeah, yeah,
And that's it. Now on the high end, I don't really have any ceiling to how high I will go. But the big thing there becomes money management and risk management.
yeah.
So ultimately, this is where sizing comes in and maybe a little different option strategy or whatever. So my basic rule is I won't risk more than 2% of my trading account on any one given trade. And that's worst case scenario. That means if the stock gaps against me and I lose all my money on that option, that would be 2%.
Okay,
So then that is going to go to okay. So which option strategy am I going to use? Again, I like to just buy calls, but if it gets into a really expensive stock, then I might have to do a debit spread to keep the price lower.
can you tell us how the debit spread works? I'm only myself just getting my head around it. So some listeners might be interested to know how that works.
Okay, so there's many different kinds of spreads. I just do vertical spreads, which means that let's say you want to buy an option at whatever $10. We'll just do round numbers here.
Yeah,
Okay, so you want to buy that option at $10, but you can't, and that's per contract or something. But that is too much for, like I say, that model of 2% of your trading account. So, and remember, each option contract, you've got to multiply times 100 because each contract controls 100 shares of that stock. So then that would be $1,000. Okay, that you would have at risk
Yeah.
if you're paying $10 for the option contract.
Yeah.
And then, okay, so I said, well, I can't risk 1,000. So then what you would do is you would then sell another option contract so that you'd make money and you'd collect money on the option you sold because you're selling that to someone else. They're paying you. And then, now you got the difference between the higher price when you bought, the lower price when you sold, and then the difference is what your maximum risk would be. So you can consider that second. And by the way, they're the same. They're called vertical spreads because they're the same expiration date, but they're a different strike price. So you can get all kinds of fancy with calendar spreads, diagonal spreads, all that kind of stuff. I don't do that. I just keep it simple because, excuse me, option pricing is multifaceted and you got to take into account time decay, volatility, delta, gamma, all these different things, which, gets into the weeds. But, so I just keep everything real simple. So basically, you think of selling the option as buying insurance on the position you bought.
Okay. Yeah.
So if it goes down to, let's say you bought a call at $50, a strike price of 50, you sell one at 45. So then if the stock goes down below 45, that's actually good. Now you'll make money on the $45 strike. You lose money on the 50. So there is that, you're hedging
Yeah,
your
hedging, yeah.
position.
I was gonna say,
Yeah.
yeah. Yeah, yeah.
Mhm.
When you're looking at stocks, are there any particular patterns you're drawn to? Like, I mean, people talk about the pan and handle, which is followed very often by a sharp move up. Are you looking for those kinds of patterns on the charts?
I do trade price patterns for sure. Not so much the traditional ones like that. I'll just trade, like I say, basic trends early into new trend. I'll trade exhaustion patterns where, again, the market gets beyond 2 standard deviations from the mean, and I trade those back to a version of the mean. I have 3 different uh, price patterns that are not really traditional price patterns that I came up with, but they're nonetheless they are price patterns. And but yeah, those are my two really standard patterns that I'll trade. So they're not really traditional patterns. I like triangles. I'll trade some triangles sometimes. Um,
Yeah.
Bollinger
Okay.
Band squeezes sometimes,
Yeah.
but
Mm.
they're not my bread and butter.
Okay. How do you decide when to take profits and when to cut your losses?
I like to, again, there's several variables there. I wish I could just, give you a solid answer. I do this, bam, done. But I'll give you a couple of things that I look at. So, for example, let's say that we bought whatever it is, whatever market, futures, options, stocks, forex, and as it's going, so the next level of that I'll be looking at to potentially exit would be the next obvious resistance level. Okay,
Yeah.
so when we get into that resistance level, then I watch the price action and I watch my momentum indicator, my cycle indicator, and I see, okay, how is the market moving into that resistance? So we all know sometimes markets bounce off resistance, sometimes they just kind of
Push
cluster
through.
and
Yeah.
move sideways, and other times, right, they break through.
Yeah.
So I just watch the energy, and I'll see that in the price bars, the candlestick patterns. Do we start getting dojis or spinning tops, narrow range bars? That shows that okay, the market is at the very least pausing, or is it just screaming through with wide range bars closing higher and higher and higher and higher than the previous bar? Then I'm not going to get out. Okay, we're at resistance, but we're moving through that resistance with power.
Yeah.
So I'm not going to get out just because there's resistance. Support resistance is broken all the time. Otherwise, the market could never go anywhere.
Yeah.
So those are like my warning levels where I will watch for the shift of momentum, if there is one or if there isn't. If there is, then I'll usually take some profits, maybe not all, but at least partial profits there. And if everything, starts turning down, then I'll just take everything out. If nothing starts turning around, then I just keep everything in. So it's really trading bar by bar, just watching bar by bar. What's that energy of money flow doing at those levels?
Yeah. And what time frames would you be using on your day trading? The 4 hour?
I
It seems obvious to say daily, but very often it's 4 hour.
yeah. Um, I trade really short-term charts. And this is a question when people ask me this, they're usually really surprised with my answers.
Okay.
So, for example, day trading, I just trade the futures, and it varies on the market. But I've been trading the Nasdaq a lot lately, the Nasdaq 100 to be specific,
Yeah.
and I've been using a 100 tick in a 300 tick chart. So those are my two time frames, and that's really fast. And I'm usually in and out. I'm basically scalping the market, and I'll usually be in and out within a minute or two.
Okay. So, 100 can you yeah, a lot of people won't know what that is, 100 tick and 300 is in terms of minutes, what is that?
There's no correlation to minutes. Yeah, it's completely different things. So a time-based bar, like a 1 minute bar, obviously lasts for 60 seconds, right?
Yeah.
So that's easy to quantify. Tick charts are completely uncorrelated to time. They're correlated to the number of trades that go through the market. So a tick in this context is a trade. Okay. So if one trade goes through the market, that's one tick. Now, that's not correlated to time and also not correlated to volume. So you could get one trade that goes through that's maybe one contract, that's one tick. You could get another trade executed that goes through the market, and that has 100 contracts behind it. And that's still just going to be two ticks.
Okay.
Okay. So what we're doing when we trade tick charts, which is what I like to do, tick bars, is there's advantages and disadvantages. It tends to smooth out the price patterns. Whereas with time bars, you can get a lot of little, one of my friends calls them mouse tracks, where the market gets a little chaotic. Like we said before, a lot of dojis or spinning tops, and the market just kind of goes sideways because it has to form a bar every, whatever, 5 minutes. Okay, if it's a 5 minute bar, it just has to, even if the market doesn't go anywhere. And so it doesn't create as nice a symmetrical pattern as tick bars do. Because if nothing's going on in the market, um, then nothing's going to happen with the bars. Bars are not going to form. And so you don't get as much of these noisy patterns, where the market just kind of going sideways with all these dojis and so forth. So it helps. One of the things that helps you do, and again, it doesn't prevent it, but it does help keep you out of choppy market conditions.
Okay. Where do you find this setting? Is there a tick setting as you described it on the chart? Yeah.
Yeah. So candlestick is not related to tick. You can have time-based bars that are candlesticks, and you can have tick bars that are candlesticks. And I do use candlesticks. So the setting, well, it depends on the charting platform, obviously, but it's usually where you choose your time interval, wherever that would
Yeah.
wherever that setting is in your charting platform. Um, so you could set it to, for example, 4 hours. You could set it to 1 hour. You can set it to 1 minute, and it's usually in that same section in your software where you can go for time based to tick charts.
Okay.
So you could do tick charts. You can do volume charts, volume bars. Volume bars means that bars aren't going to form unless or each bar will represent a certain number of uh, contracts or shares. So that's directly associated with not just the number of trades and not time, but volume.
Okay. What put you onto tick charts? Was that a mentor or your own trial and error, and then you compared the 2 styles of trading? What put you onto that?
Yeah, one of my mentors.
Yeah. Okay.
And then I did, I compared both. I was trading minute bars before that, and actually 2 minute bars for a long time, for many years. My go-to was the 2 minute bar, and they're still good.
So you'd use daily and 4 hourly just to get direction, and then go down right down to the smaller time frames. Is that right?
Actually, for me, when I'm trading really short time frames like that, and I'm just scalping, I don't really look at the daily. I don't look at the 4 hour. I don't even look at the hourly. The longest time frame I'll look at is a um, 3 minute bar, or yeah, 3 minute bar
3
chart.
minute, yeah. Okay,
Yeah.
that's interesting,
So
yeah. Yeah, yeah. It's
I
interesting,
told
it's
you it's kind
yeah,
of crazy. It's
it
fast and furious. It's
yeah, very fast. I mean, a lot of people I know, will use the 15 minute, especially on, futures, well, indices like Nasdaq and so on. Yeah, yeah,
yeah.
yeah.
Very standard time frame would be 5 minute and 15 minute, and I use that for quite a while. And by the way, I don't recommend people trade fast charts like I do unless you have a lot of experience under your belt, because things move so fast you don't really have time to think about it. But over the years, I've developed pattern recognition through repetition. So I don't really have to think, oh, this is this pattern. Oh, that is that pattern. Oh, you don't have that when you're trading, 100 tick chart. It's so fast, especially on these high volume markets, that you just have to respond. And the only way you can do that is just visual identification, where you just know it. You just see and know, and you press the button, your macro, and you trade, and you're in and you're out, and you're in and you're out. And yeah, so for most people, I think a 5 minute chart and a 15 minute chart is probably a good place to start. I know a lot of people, especially forex traders, like to do 1 hour charts, 4 hour charts, things like that. That's fine. I don't have the patience for that, so I've never traded those particular time frames. It's just, yeah, it's just a personality issue. And that's part of trading too, is each finding our own way. There's nothing wrong with trading 1 hour and 4 hour charts. It's very common. And if you got the patience for it, God bless you and the horse you rode in on.
Yeah, yeah. Well, I feel that way about Forex most of the time. It's like watching paint dry.
Exactly.
Yeah,
Yeah.
yeah, yeah.
Yeah.
So you run Top Dog Training. Talk to me a little bit, for the listeners out there, talk about your, training.
Yeah. So Top Dog Trading is a company I started about, oh gosh, probably 20 years ago now. And started out real small. Actually, the way it started, I didn't even intend to teach trading, but I came up through the ranks of the trading club I mentioned to you before, and then the mentor who I hired from there, uh, he stopped charging me, and he said I was his best student and the most serious student. I was one of the only few people who'd actually follow through on what he said, and so like I said, he invited me over to his girlfriend's house, and we'd go trade there every morning. And by the way, this is a gentleman who was in his 80s, and his girlfriend was in her 40s.
Okay, yeah. Okay, interesting. Yeah.
Yeah, he was quite a character. He was, yeah, he was a rough and tumble guy, and he big dude. He was in the military, and his job was to go rescue prisoners of war,
Oh, wow. Yeah,
literally
that's a story.
infiltrate.
That's
Yeah,
a whole podcast in itself.
it is. It is. But he was hardcore, and so yeah, I was one of the few people who could, tolerate his hardcore attitude. But I appreciated it and he treated me beautifully. And so anyway, so what happened was he talked to the owner of the trading club, and this was a big trading club, hundreds of members, and says, Barry's my best student, and you should really have him speak one day. And so the gentleman owned the trading club, and I knew him, Richard, because I've been going there for years. And so he asked me to teach and give a lecture one Saturday. So, cool, okay. And it went very well, and I enjoyed it. I've been a public speaker my whole life, and so I love doing that. And afterwards, a lot of people came up to me and said, "Hey, where do I get your courses?"
Yeah. I
I
don't
don't
have
have
any
any
yet.
courses.
Yeah. Yeah.
How much are your courses? Where do I get them? And I said, "So, well, I don't have any right now, but I guess I could do, personal mentoring. I've never done that before either, just to be transparent." But they're like, "Yeah, that's fine, cool. I don't care. I just love what you're saying here, and I've never heard some of these things before."
Yeah.
And so it just got started that way. And then I got more and more students from there, mostly. And then a few people from outside the club, because the people in the club would talk to people outside the club. And then I just got too many people that it was too time consuming. So I thought, okay, this is crazy. So I'm going to just, put this in writing. And that way I can distribute it to more people than me having to teach each person one on one.
Yeah. And was the
So I made,
one-on-one, personal, as in, one-to-one sitting down in the same room, or was it,
mhm,
yeah, it was, yeah, okay. Mhm.
yep, they'd come over to my home office
Yeah,
and we'd go
very
in front of
local.
the monitors and, yep.
Yeah.
So I enjoyed it, but again, it gets kind of repetitious and especially at the beginner level. So I said, okay, I'm just going to create some manuals here. And so I did that. And then later realized, oh, that's good, but kind of limited. So the videos would be a great addition for helping people actually learn. So then I created some videos and then eventually put together a little membership site and put all that stuff inside of the membership site. And yeah,
And the
and
rest
then
is history, as they say.
rest
Yeah,
is
yeah,
history. Yeah,
yeah,
it just took off. I
yeah,
did a little bit of you know SEO on Google, which back in those days, that was easy, and you could rank for a lot of things easily without even paying any money. And then
yeah,
after SEO was over, then Google AdWords, you could again get really really cheap traffic, and that worked incredibly well. That's actually when my business exploded, was with Google AdWords back in the day.
yeah,
uh, Now, again, those days are gone too.
yeah, sure.
Everything keeps evolving, and it's so expensive, so
Oh,
I don't
yeah,
do
yeah,
that.
it's impossible, isn't it? Yeah, yeah. And so are you a team, like 2 or 3 people, or is it just you on your own?
Oh yeah, it's grown over the years, so there's a lot of us now,
Okay.
but we all work remotely. So yeah, we don't have a brick and mortar, and so I've got people in the Philippines. I've got people in Europe. I've got people in Asia who work with me, and of course here in the U.S. as well. And so yeah, we
Hmm,
just all kind of have our own things. So I'm not very technical. I mean, with technology, technical analysis, yes. Technical with computers and all of that, no. So I hire people to do that stuff for me.
yeah,
Web design, customer service, pretty much everything. Now I try to just exclusively do my own trading, obviously, and then the teaching part of it. And I try to do nothing other than that.
yeah. Do you still do one-to-one, or is it all in the group and through the internet?
No, I don't do any one-on-one anymore.
Yeah, yeah,
It's just not, frankly, worth my time. I would have to charge so much
yeah,
to make it worth my time. So, yeah. So I
yeah,
do have small group coaching for options.
mhm,
And so that is, the most intimate way that I teach right now. We've got about 20 people in a small group that will take at any given time. And, it's not inexpensive, but I really, really enjoy that. And people still get very close personal attention. They can come on to our webinar platform that we use for that. We get on twice a week live. We do our scans. We talk about trades. What looks good now? What did you take before? And so we do that live, and they can come on the microphone and they can talk too. So we can talk back and forth. So it's still very personal, and we keep the group small. In fact, some of the students now are taking on teaching roles. They've done so well. And in fact, our session this evening, we have one of our students coming on, and he's going to be sharing and teaching. So that's really our goal in this program, is to bring everybody up to the level where that they're not only successful, but they are so successful that they can teach others. And the old saying, if you want to learn something, teach it.
yeah. It does help
And
you, doesn't it? Yeah,
it
yeah,
does.
yeah,
And so that is actually built into the program, that even if you don't want to be a trading teacher, when you get toward the end of the program, we want you to do some teaching, because that'll take you to the next level of your trading.
yeah. It's funny how when you are forced to explain something that you do, that you actually sharpen your own game, not just help others.
100%.
Yeah, 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 yeah. Last point. How do you see the next few weeks, if you can see them at all, panning out? Between now and say Christmas, January. The new president and so on. Do you see a similar sort of volatility going on for the next 2 or 3 months, or do you think things will start to calm down a bit?
Well, that's a great question. Everybody wants to know that. I
Yeah,
want to know it
yeah,
too.
yeah. It's a gut feeling. That's all you can have, really, isn't it?
Yeah,
Yeah,
educated guess
yeah.
is all I
Educated
can
guess. Yeah,
give you.
yeah,
I do expect the markets to still be pretty volatile. Um, President Trump has put out his legal challenges there. It doesn't seem like they're going very well for him, but he's such a strong personality. I think he's going to fight till the end. Um, he has not cooperated with President-elect Biden in transitioning. Um, yeah, and then we have so much tension. I can mostly speak for the U.S. here. Racial tensions are very, very high.
yeah,
Um, you know, the coronavirus, COVID-19, is still a problem, and it's getting worse now again. So
yeah,
people are very on edge about that. Here, I drive down the streets of LA, and I'm just seeing uh, all the little mom and pop shops being boarded up, people going out of business, more for rent signs, for lease signs. So I'm concerned.
yeah. And then and the stimulus, which is still
Hmm.
a big question mark hanging over that, isn't there? Do you think that will?
Huge.
Yeah. Do you think that will get pushed through before, say, Christmas?
Boy, the problem is they've politicized it so much,
Yeah, yeah. They have.
and everybody wants to take. Well, Democrats want to take, um, not responsibility but credit. Republicans want to take credit, and so they get in these stalemates and they have philosophical differences. And I wish they could put that all aside and just think of the people, and that hey, we're all here, we're
Yeah,
Americans.
yeah. And
Um,
and suffering,
Before
with COVID.
exactly, we're also citizens of the world, and we all need to work. Because this is a global pandemic, obviously. But unfortunately, they haven't taken that attitude. They talk the game, but they don't act on that, and people are hurting. And I'm very concerned. Yeah.
Yeah,
So
yeah,
I'm
yeah,
not an economist, but just from what I see and what I'm hearing from people, yeah, it's a very concerning time. But the other side of it is, as you probably have heard, the Chinese symbol for crisis also means opportunity. And I've seen, and I'm sure you've seen this too, that the lockdowns, the social distancing, all of that sort of thing has changed the way people work, but that's also pushed some things forward faster than we would have seen otherwise. So communication, webinars, webinar conferencing, you look at Zoom and how
yeah,
they've
yeah.
zoomed.
Yeah, quite.
Their stock has zoomed. And so I think the transitions that are happening now were going to happen anyway, just a lot slower.
Yeah, yeah. It's
And
definitely been a
so
catalyst on that side of things, hasn't it? The stay-at-home
100%.
kind of life, yeah. Mm.
Yep. So if there's any silver lining in this, it is that I think it's pushing a lot of the new technologies and things faster. Unfortunately, the flip side of that is a lot of people in more the traditional economic sectors are getting hurt, and I think will continue to get hurt. And we're never going to go back to where we were.
Yeah,
And
yeah, yeah, yeah. Some of that's
it's
good, some of it's not so good, but yeah,
yeah.
exactly. Well, on that note, yeah, quite a sort of mixed note, but very real. Thanks so much, Barry, for talking to me. It's been a pleasure.
Well, thank you, Nick. I appreciate that. And yeah, thank you for inviting me to this interview. And it's been very enjoyable. You're a great interviewer. And I've listened to some of the other previous podcasts you've done, and you do an excellent job. So thank you so much.
I was talking just now to Barry Burns. If you're looking for really practical help with your trading, do look him up at Top Dog Trading, not training, as I think I said earlier. I'm Nicholas Penrake, and you've been listening to A Trader's Life.